Hello YouTube, I am Prepper Princess, the author of Living on Almost Nothing. If you're interested in purchasing my book, I'll go ahead and leave a link down in the description box below. It is available in paperback form now, and don't forget, any proceeds that I make from Amazon, whether that be book sales or affiliates, always goes to charity. I do not keep that money, so just keep that in mind. Again, I'll leave the link in the description box below. So I want to give a full disclosure here. I am not a financial advisor. This is for entertainment purposes only. Do your own due diligence. Always consult a financial advisor before making monetary decisions, and do not listen to a random person on YouTube. Got it? Okay. So here's the deal. I am a millionaire. I have been investing since the age of 18. I'm now 41, so that makes 23 years of investing. And I'll just tell you the three top dividend stocks that I have that make me $1,500 a month. I have other stocks that make me additional money in dividends, but these are the ones that I can't recommend, but I use personally for the dividends specifically. Okay. So the first one is Coca-Cola. We all know who Coca-Cola is. They've been in business since like the 1800s, 1886. They make coffee, tea, water, juices, energy, and sports drinks. It's Coca-Cola. You know who they are. Anybody knows who they are. They have a dividend yield of 2.91%. And if you were to compare that to something like a index fund that is not directed towards dividends, it's double or triple what you would get from a normal index fund or market fund in terms of dividends. The second one is Amcor. So Amcor is really interesting. It is a family tradition to invest in that. My grandfather used to work for a company called Bemis. And I actually have a Bemis toilet seat. Bemis is no longer in business. Amcor bought out Bemis. But what they do is they make packages, not like Amazon boxes. They make packages for stuff like food, snacks, beverages, pharmaceuticals. They make the packaging that you buy your potato chips in. They've been in business forever. They made it through the Great Depression, and their dividend yield is 4.1%. So that is a big one. And again, it's just a family tradition of ours. And my grandmother, when my grandmother passed away, she had a huge amount of stock in Amcor, and that was the majority of her income. So of course she got Social Security, but she got dividends off of Amcor because when my grandpa worked there, he got the stock at a discounted rate. So he had thousands and thousands and thousands of, thousands of shares of this stock, and all of it provides a 4.1% dividend. So she was able to live off of just that. The next one is MPLX. MPLX is an oil and gas consumable fuels type company. Their dividend yield is 8.9%. And I've only been with them for about a year, but maybe a little longer than a year, but I bought like at the bottom, and it has just skyrocketed over the last couple of years. And it seems to be currently on a bullish trend upward. Now, that doesn't really matter to me as long as they kind of like just stay the same. I'm there for the dividend, not for the increase in the stock price, but 8.9% is a huge amount. And I'm still doing research looking for dividends that are even higher, but do not have a whole lot of risk. Now, one of the mistakes that I made is when I was first starting to invest in dividends, I was chasing the dividend. Everybody always recommended AT&T, and I bought AT&T, but the problem with that, they had a really high dividend of over 7%, but the dividend, every time the dividend would come out, the stock would drop, and then it wouldn't go back up, and then it would just drop. And so it's like, if you're getting 7% in dividends, but the stock price is dropping 7% every year, you're just breaking even. So I want something that slowly and steadily climbs upward, but still provides a really good dividend. There are a lot of what's the word, index fund dividends that also provide a really good value. And I'll go over my main one. Let me pull that up real quick. I apologize. It's there it is, SCHD. So this is a Charles Schwab US dividend equity fund, and their dividend rate is 3.39%. So that's as of the point that I am making this video. This is an index fund that has a whole bunch of different stocks in it. So it really spreads out your risk. It's not quite as volatile as an individual stock, but it really is created for the high dividend yields. And the historic risk is below average, but the historic return is average. So it's a below average risk with an average return. Oh, I'm sorry, historic return is high. This is actually on the website, my bad. High return with below average risk. So that is the one that I go to for large corporate stuff, like stuff that has a whole bunch of different companies in it. And that is my dividend yield for my index market funds. It's an ETF. It's a dividend equity ETF. SCHD. Currently, the price is around $76. So if you've got $76 and you want to put it into the stocks, there you go. That's one that I do. I know that this video is super short, so I'm trying to actually make it a little bit longer by providing additional information. People are often, I think I might make a separate video on this. People are often afraid of the stock market because they're confused. They don't understand how it works. But I promise that if you make an effort to spend not 2 weeks, 8 hours a day, but 2 weeks figuring out, okay, what is an index fund? What is an ETF? What is a dividend yield? What is a good dividend yield? What are some of the best stocks that Warren Buffett or Charlie Munger have purchased? What is the best overall stock, just Google stuff like that, and a whole bunch of information will come up, and just make sure that you read all of the articles. I was going to say something about this dividend stock. I can't remember what I was going to say. I apologize. I do not use a teleprompter on most occasions. I just sort of come in here, sit with you, provide you the information that I've got. If you are afraid of the stock market or you're confused about the stock market, call a financial advisor. They charge you. Yes, everybody needs to make a living. They're going to charge you about 2%, but if you're making 10% a year and you're charging them 2%, or you're making 12% a year, they will take care of everything for you, and you don't really have to worry about it. You can just do your automatic transactions with them, and then, check every month, what's my balance? What's my balance? Okay, let's add this. Let's move this around. And it's really hard to give personal financial advice on a channel that is this large, because literally everybody's needs are going to be completely different. Somebody who is in their 20s and 30s, they're probably going to be looking for stocks that have a high growth, but there's more volatility and more risk with that. Then once you get into your 40s, maybe you want to start working on dividends. Then when you get into your 50s, maybe you want to start working on short-term gains, and so that you have enough time until retirement so that you're not at a complete loss. So it's really, I can't really just say, here's the stocks to invest in, here's what you should do, because everybody's situation is different based on your age, based on your risk factor. How conservative are you with your money? If you are extremely conservative, and I mean really, you can't lose a penny. If you are one of those people, I cannot lose a penny, this is the way it is. You can get I bonds that are trading right now at, I believe, 6%. You buy an I bond, you can put in a full $10,000 per year, and then in 10 years you come back and it's worth a whole bunch of money. Or you can do CDs. Right now, CD rates, because our interest rates are so high, CD rates are likely going to be pretty high. Oh yeah, okay, 7.5% high yield CD. That's actually better than the bonds market right now. So if you just type in high interest CDs, you can go to it. It'll come up with a million different things that will compare rates at different institutions side by side. I'm looking right here, 4.5% seems to be. It said 7%, but 4.5% APY. I mean, 4.5% is kind of like a dividend. I mean, it's just as good as a dividend without the volatility. That is a 21-month CD with Langley and their NCUA insured. So, you know, that's just something that you might want to look into if you are absolutely risk averse. Me personally, I'm not risk averse. I'm not afraid of losing money, and I am not emotionally attached to the money. So if you are emotionally attached to the money, the stock market might not be for you. It might be something where you have to go a different route with CDs and high interest earning savings accounts, maybe I-bonds, because it's guaranteed money. You're not going to lose a single penny of the money. But keep in mind that inflation is going to eat away most of your profit. But keep that in mind. All right, folks, so this has been the video of my top 3 dividend investments, including my bonus. Those were just individual stocks, including my bonus of the ETF equities. So there you have it, folks. I hope that this has been helpful. Go ahead and look them up. Just look up those different companies, look at their history and their projected output for the future, their projected future money, and see if it's right for you. Do what you can with what you've got. Prepper Princess out.
I ain't afraid of you. I ain't afraid of you. We did this long before she ever came along. Ah! So scary. You're so scary. Oh, I ain't afraid of you. What you gonna do? What you gonna do? You're blocking the view, Nala. You're blocking the view. Is it a double takedown? You guys are silly. Oh. Oh, bless you. Oh, bless you. Oh, bless you. Oh. Ain't nobody scared of you. Ain't nobody scared of you. Ain't nobody scared. Ain't nobody scared of you. What? What?